Hey everyone, happy Wednesday. Another edition, #AskRobCo with James Wild. Hope everyone is well, enjoying the weather that is about to turn. I can assure you, good weather every day throughout the rest of this month and June. It's happening. Hope you're well, James. All good?
Yeah, really good. Thanks, Rob. Really good. How are you?
Yeah, really good. Thank you. Really good show last week. Buy-to-let special with our guest Shrina. Really insightful, great numbers, great stats. We'll touch on that again in a minute, but let's go straight into this week's data and this week's handout. So handout number one, let's see where the market has been heading over the last week and what has been happening. So we were looking at some just steady growth and movement in terms of what we had been seeing, just I would say slowly but surely improvements. So now we're in week 20, and if everyone can see on the handout, we're at 374 new instructions that consistently, around that figure and has been for a few weeks now. And the sold figures this week, 182. So that's a 1 month high. And I think that is reflected in the market and what we're seeing. Conditions are good. And I feel that the feel-good factor and market sentiment, lockdown hopefully being over for good, is just driving the market forward, and good positivity there. So nice and steady, increased activity slowly but surely, and that's where we're heading. James, anything else you want to add on that?
Thank you, Rob. Yeah, I mean, we've obviously, in terms of the sales data and the transacted sales for this week, it's been a slight increase from last week. And as we predicted, the market has picked up from those those first 3 months of the year, the first quarter, which did see some subdued levels in the weekly sales figures. We're anticipating this to continue this trend, certainly up until that stamp duty holiday extension remains open until the end of June. So at what peak we see relative to what the peak we saw in December 2020, I don't think the peak is going to be quite as high as we saw in December 2020, but the market is certainly building momentum.
Absolutely. I definitely adhere to that and agree with that. And I still believe that the figures that we're presenting here will improve and get better. I think June is notoriously a very strong month. Once you've got the Easter out of the way and the holidays out of the way, June is notoriously a strong month, and I expect it to be a very good month this year. Okay, so what other data and info are we talking about this week?
Yeah, thank you, Rob. So just focusing on the high street this week and some of the changes we've seen over the last 5 months of this year, largely following on the back of the pandemic year of 2020. So Debenhams have now closed the remaining 49 stores following the prior 52 stores which had closed. Great shame for the high street and their presence, which we've seen over many years. Debenhams as the brand, they will continue online if they've been bought out by the online retailer Boohoo for a figure of 55 million, which was agreed earlier this year in January. So there's going to obviously be some vacancies there. There's sort of large department store style of stock available. We know that Marks and Spencer's, they reported quite heavy losses last year as the pandemic took its toll, largely on the clothing sector of their brands, but food sales remained resilient for them as they had a tie-up deal with Ocado, which did contribute to their sort of year not being as bad as it could have been. However, M&S, they currently have 254 full-line stores selling their clothing, homewares and food. And it says that there has been a decline in some of these stores over the last 20 years, with about 30 of these stores closing in the next decade. However, there will be another 80 stores which will be moved to better locations or merged with nearby stores of theirs. There's going to be 17 new or expanded stores for M&S in the next 2 years, that is. So they're going on a bit of a realignment of how they're presenting themselves to the market. Some of those stores, we understand, are going to take place of the former Debenhams sites, which will take up some of that spare vacant stock and premises on the high streets. Here in London, on Oxford Street, one of the most prime pitches in London, we've got the former Topshop corner unit outside the Oxford Circus station. This remains vacant, so it's going to be interesting to see who takes that store over the next few months, as that is a real landmark flagship store location. Now, we've got a further handout today, handout 2, in terms of some data, which is largely on the sort of restaurant and food sector of the market. Now, according to some statistics that we've got here, the UK has lost around 10% of its high streets restaurants during the course of the pandemic, with the worst hit sector of the restaurant industry being the casual dining sector, which has fallen by nearly 20%. And I think this graphic really helps to highlight some of those. We've seen a shift in the sort of overall restaurants go down. The food and pub sector has actually not reduced as much as the restaurant sector. There was sort of those periods last year where there was takeaway pints available and some of the takeaway food options, which allowed some resilience from that sector. However, we do note that the pub sector in England has been suffering for a number of years with viability and the increasing costs of drinks. So unless they've really gone down the avenue of being a sort of a food premises or a gastro pub, they have really struggled. And, you know, as we've seen, Rob, we've done a number of development valuations of former pubs on sort of corners in London, which are now residential flats.
Yeah, I mean, that's been a big trend. HMOs and conversions to flats. And, you know, that's just part and parcel of how that pub market has developed. I think it's really interesting seeing the restaurant and the high street data that you're sharing. No surprise because of lockdown. And I think what's the biggest interest for me is the rebound that we're going to see now over summer in that sector: restaurant, retail as well, hospitality. I think they're the 3 big ones. And I'm really, really interested to see how those numbers rebound. It's a great moment for startups and independents and opportunistic restaurant, bar, hospitality, retail units to take advantage of the brand decline, where the brands have really suffered and been hurt, and maybe a lot of them have closed down, like you've mentioned. If you've got a really good product in the right place, the right location, and the demand is there, then I think there's a big opportunity. It will be interesting to see footfall numbers in a lot of those places, because we've talked repeatedly how well the restaurant and bar market has performed in village locations. And we need to see what the high street in the non-village locations really looks like, whether you're in city or in town, that requires and demands huge footfall, because these industries have very low margins and they need big numbers to make their money. And to get that, there has to be a confidence on the streets for people to be going out and spending money in that sector. I believe there will be a big spend. We've already talked about the 200 billion of money sitting in people's accounts ready to spend, and a lot of that this summer will go in those sectors. So I think it will be great and fascinating to follow that journey over the next 3, 6, 12 months, so we can compare like for like, see what the rebound looks like now. A lot of those areas, as you said, were struggling anyway, all of the commercial valuations around the areas that you've mentioned would have seen declining declining rents in certain aspects, and also a lot of saturated markets. The food and coffee hospitality market was very saturated. COVID has created a disruption to that market, and now it's the better product that grows and carries on and survives. So I think that's going to be fascinating, how the commercial market works in hospitality, restaurants, food, etc. What else do you have, James?
Yeah. Well, I was just going to add on to that further, Rob. I mean, restaurants have been very, packed out, and it's very hard to get a booking these days at any restaurants. So, very positive news that they are now largely operating at full capacity after what was probably a very difficult month of sort of April, May. The wet weather here has not allowed some restaurants to reopen in terms of viability, in terms of their lack of outside space, and possibly, lack of, sort of covering with the elements.
I think that's really important, James. The May weather has been so bad, and the fact that people have only been able to sit outside for half of the month, and the fact that even if you could sit inside, there's a preference to be outside because of a certain nervousness to be inside. And because of that, when we do the like for like, the numbers are going to be really not as strong as had been hoped for, because the weather conditions really have not helped. As I said at the beginning of the show, I'm very, very confident the weather is turning as from tomorrow. I think June is going to be really, really good weather, and there's going to be a feel-good factor and a buoyancy about the great outdoors and hospitality and restaurants. And I think it will go strength from strength to strength. I think June and July will be some really good months. And I think we're going to have to just discount the like-for-like May figures, because I really feel the combination of lockdown or only being able to eat and drink outside in a bad weather month has not supported that industry whatsoever.
Yeah, and I think, like I said, on capacity, they're very full. That there'll be no need from the government to step in with a eat out to help out subsidised scheme this year. I was in Cornwall very recently, and one particular restaurant, we were fortunate enough to get a booking in. They said they were fully booked until October. Phenomenal. A very popular British domestic tourist destination at the moment, Cornwall.
Well, you saw the news yesterday, James. Airbnb came out and said that Cornwall is now more in demand than London from their latest stats and figures that was released yesterday. And I think, your example further demonstrates the current trend of where people want to spend their time, their leisure time, their free time, and Airbnb is thriving in that location currently.
Yeah. No, it's good luck trying to get a reservation. Moving on the high street, Amazon, they're set to open their third till-free supermarket in the UK. It's a site on Chalk Farm Road near Camden Lock. This follows the success of their two earlier stores, the first store in Ealing, second store in Wembley, respectively. These stores, they're a first with the sort of just walk out technology, which have created, quite the media frenzy. We've seen lots of articles on the news about this in newspapers as well. Quite often, from what I've seen in these stores, there's been more people outside the store than inside, with people queuing to get in and experiment with this new concept. And it's going to be a question of how this new concept, first of all, does it work? Is it viable? And then I think, how is that going to feed into the high street? How is it going to be rolled out? Is it going to be able to help some of these vacant stores, other stores and brands, franchises going to be able to adopt this till-free, just walk out technology?
First question on that, James. As a local, will you be trying that one out?
Yeah, I haven't actually been into one yet. There's been too big a queue for me to experiment with it, but keen to go and just see how it works. I'm quite interested in not only the convenience of the stores, but also just the technology which sits behind it.
Second point on top of that is last mile logistics. And distribution, been talking about it a lot this year. It is the trend that I am seeing, and it will be your Amazon and eBays that will be driving that. And I'm pretty convinced that once these units prove to perform, if that's the case, that's going to further advance the need and requirement for this last mile logistics and distribution in city centres and hubs that allow for you to deliver goods within minutes, door to door, at a fast pace. So although it's early days, the patterns that I'm seeing in Europe are where the investor trend is, it's in that space, and I don't see that it's going to be any different here. So last mile logistics and distribution as key hubs within cities is going to be a big marketplace moving forward. What else have we got this week, James?
Well, in terms of, we've talked about stock supply in the housing market in the last couple of weeks, and some of the obstacles and hurdles which the government and also the market has got to overcome in delivering more houses to the UK market. However, just a slight sort of possible stumbling block to that at the moment, the Office of National Statistics have projected 7 to 8% material price rise in construction products expected for the following year, just from lack of supply. Just to break that down slightly, that's 7 to 8% on an overall basis, completely blended. More specific, there's meant to be, in some types of softwood timber, a 50% price increase and a 30% price increase on concrete. I mean, this could help to drive some more modern methods of construction, but ultimately could present some short-term problems in those house builders actually delivering houses on budget, on time, so then they can in turn deliver those to the market. Here in London, we've got an enormous housing shortage, a shortfall that year on year, which we're trying to erode away with new initiatives. Changing government legislation on planning, so how that feeds into the market is going to be an interesting one, which is going to play out in the next couple of years.
I wonder if the stats will prove that that's a perfect storm, with huge demand for refurbs and extensions and light development, heavy development and new builds, and people upgrading their homes with offices and work from home. All the money is going into that space. All the demand is going into that space, which creates that demand and supply pressure, which then puts an increase on pricing for your core material costs, such as concrete. And I feel that's a perfect storm. And I feel that the next 12 to 24 months will see a continued drive in that area as our habits change and home improvements will continue to grow, both macro development and building work, and also micro with home improvements. Anyone out there, home improvement products, light, heavy refurbs, great place to be, in big demand currently, and a lot of the lenders are seeing great traction with that. I suppose the only caveat now will be, James, in the valuation world, pricing up those schemes on the back of increased costs for materials could change. And maybe when you're doing your residuals and your GDVs and calculating your construction costs, I wonder how relevant such a pricing change will be in terms of any developer's profit that might get reduced because of that. I think that would be a really interesting one, something that you costed up 6 months ago for maybe a year or 2 year development could, if you haven't fixed those costs or supplies, could be have a negative impact.
Definitely. That could be an issue for some ongoing developments whereby, they've had to overcome material shortages and stock supply issues over the last, 6 to 12 months. In turn with that, if they have been building something out which is particularly sought after, sort of more houses with outside space, flats with balconies, terraces, those products, as we've been commenting, there has been some price rises in certain markets. So possibly those price rises could offset these increased construction costs. But if they haven't quite got the product delivery right in terms of what they're building, whether they're building 2 or 3 bedroom flats, no outside space, that is not what the market is really. That is not where the demand is in the market at the moment. So we could see some sort of rejigging, if you like, of certain schemes, do some more to provide the provision of outside space, possibly start to inset some balconies or something within development. I think they've got to be house builders and developers have got to be very much having their finger on the pulse in what the buyers want, where the demand is, and what's selling in the market at present.
Brilliant. Anything else this week, James?
I just wanted to close with a quick football statistic, as it's the Europa League final this evening. Now, across the last 20 years, the Europa League and the Champions League, those finals have had 15 Spanish football teams playing the finals. And on no occasion has a Spanish team not won when they've featured against non-Spanish opposition. So Manchester United versus Villarreal this evening, are they going to be first team to beat Spanish opposition in Europa or Champions League final in the last 20 years?
Yeah, I think the answer is definitely going to be yes. I think they are going to win. Unfortunately, as an Arsenal fan, I've seen us lose 3 European finals against Spanish teams. So that is a painful one, James, and not something I want to be reminded of. Quickly want to touch on the valuation podcast. Hundreds and hundreds of listens from everyone in the last week. Super grateful for that. Hopefully you've got the link. Hopefully you've downloaded it. Hopefully you're listening every week. We will be moving this show onto the podcast so you can have more action, interaction, re-listen, listen again at all times. So really, really appreciate that. And just wanted to touch base for everyone's support on all the socials. It's been great. And really appreciate your support. Next week is half term, so we are going to be back in 2 weeks. So no show next week, back in 2 weeks, and we will send you a reminder of that next week. Have a great bank holiday, great data, intel, and content, James, today. Much appreciated. Thanks, everyone, for listening, either live or on the reruns, and we will see you all soon. Thanks, James.
Thanks very much, everyone.